Mr. Pratip Chaudhary joins in. So thanks very much for the time. Let's start off first with your overall view on the macro data points that have been coming out of late. We got the trade data, we got the CAD numbers that came out, which were disappointing. What's your sense?
No, I think we have to see as the data comes in. So the fiscal deficit data for the budget looks all right. And now we will see how the government expenditure moves and how the company earnings, particularly the fourth quarter earnings for the companies, which would start flowing in by April and till mid-May. I think that would determine the direction and the flow in the market.
You talked about Exxon.
But there are some positive features. I think the crude prices are down. The Brent is down from 110 to about 104, so which augurs well in terms of lower under recoveries for the oil company and lower fuel costs. And government is taking some concerted steps to alleviate the fuel shortage for power plants.
So yields have started spiking up again. We're close to almost 8% now for the first auction of this fiscal. That's saw great demand coming in. How much of an impact on yields do you see at SBI?
No, I don't think it impacts SBI particularly, because our long-term bonds are largely in the HTM, and currently we are not expanding our long-term bond portfolio, and particularly the yields on treasury bills, which are typically 90 days, 180 and 360 days, and the 10-year bonds is this similar. So we are more at the short end of the market. And we don't have a problem, because even if the T-bill yields are at 7.8 or 7.9, the repo is happening at 7.5. So I think banks and the others are going all the way to the bank laughing.
So let's talk about the asset quality picture. I mean, you've got voices, specifying concerns that the condition may not improve for the coming year and a half as well.
I think we should not start with the pessimistic assumption. Our Q4 numbers of NPAs look to be lower than the December numbers. So in the fourth quarter we would have contracted, and that would also diminish our requirement for provisioning. So we have not seen an unusual increase in the number of restructuring going on. In fact, the positive part is, though we don't have much of exposure to state electricity boards, all the state electricity boards have come around to issuing bonds at an appropriate pricing where the banks don't have to take a NPV loss, and they are also readjusting their prices and the tariffs. The biggest I think adjustment problem is that so far this inflation was suppressed. Like the diesel prices, these were suppressed by subsidy, similarly power tariff. Now whatever was suppressed inflation is coming into the open, and that may be causing some anxiety. But the point to remember is that these are the real prices. I mean, if the government was absorbing it in some ways, that is deficit financing, and deficit is deferred taxation. But the positive part is, I have travelled extensively in the country, the agriculture harvest is extremely good. So we should put more purchasing power with the rural people.
So do you see a positive, talking about the power sector now, do you see a positive for the sector in light of the CERC order that came in just a few days back?
It's not right for me to comment. The CERC is beyond the purview of the banks. So the CERC orders basically affect the power producers and the distributors and the CERC itself and the consumers. But basically all power producers, when they go in for their project, must make sure they have an offtake arrangement at which their ROEs would be sensible. So I don't wish to comment on this specific development.
What about SCBs? Going forward, if things start to improve for them, will you be open to further lending?
I can't say that, because we have very low exposure, so it will be for the other public sector banks to decide. But at least they have recognized the need for a viable economic and financial state of affairs. And many of the SCBs had not finalized or got their audited results even up to March 11 or March 12. So it puts into prominence and puts on priority the need for arranging their financial books in order.
So what's going to be the rate trajectory, particularly for SBI? Though I mean the RBI has gone ahead and taken a few rate cuts, most banks have probably been following strategies of their own.
See, you should not look at who has cut rate and who has raised the rates. You look at the absolute rates. So PNB, even if they have cut the rates, I think their interest rates even after the cut is higher than SBI. Now, one great lesson we have learned, that the depositors are rate sensitive. Now, our peak deposit rate for 3 to 5 years was 8.75, in line with most other banks. Some had 8.75, some had 9. Now, we dropped it to 8.5, and there was a massive rejection by the depositors. Our deposit growth in Q1 was 16,000 crores, next quarter was 40,000 crores, then it came down to 9,000 crores. So, we had to move back the deposit rate at 8.75. I think each bank has to find its way and find its path as to what would be the optimum rate on deposits. And for us, the job is much easier because we don't quote for bulk deposits. So, our deposit pricing is uniform across all and largely on retail. So, that's why we don't see any need for adjusting. But going forward, my advice to all the banks should be that they should reduce their dependence on bulk deposits, high cost deposits, which bring lethargy in mobilizing retail deposits, and which also make it difficult for these banks to be an efficient lender.
So what about credit growth? Q4 had been spectacular for SBI. Do you see the same pace carrying forward?
Q4 growth has been really spectacular, and in fact generally in the Q4 there is a pickup in corporate demand which happened, and we positioned ourselves very competitively. 9.70 is our base rate for AAA and AA, and 9.95 for single A. So we saw a good pickup, but what is most heartening is that there is a pickup in the home loans, and home loans are now growing between individual home loan mortgages at 30-35%, which again confirms our hypothesis that in home loan we have an interest rate of 9.95. So in so many ways, like many other activities, the demand is a function of the price.
So on the corporate side, is it still expected to be a little bit sluggish?
Difficulty or hesitation in lending to the top corporates. If anybody is rated single A or above, I think we would still be more than willing to lend. And the credit growth as such is also a function of price. Now, we would like to confine ourselves to the top quality and maybe be more realistic and more adjusting in the price thereof, but we would be uncompromising on the quality. But the investment demand, we are seeing some green shoots, particularly in the textile sector and the steel sector and the metal sector. There is increasing inquiries about new projects.
So talking about corporates, it brings me to Kingfisher Airlines. Obviously, you had the court suggesting that they're not going to put a restraint on banks to go ahead and sell pledged shares within the UB group companies for loans given out to Kingfisher. How many shares at SBI have been sold particularly, and what's the, what exactly is the overall situation like for Kingfisher's account?
See, I have told the other channels and I am telling you also, whenever you want to schedule a detailed discussion on a single corporate, it's already appropriate that that corporate representative should also be present in the function or in the interview to present their side of the story. And frankly, what securities have been told, how many shares have been sold, in State Bank of India, it doesn't come to the level of chairman. The chairman sits on the board and we give overall direction that please call up the advance, again based on the recommendations of the people on ground, and then the rest of the thing proceeds. So depending on how many shares would be sold is depends on how much the market would absorb. So I don't think I have those details, and I think rightly so.
Sir, quick comment on how the performance of international subsidiaries is doing right now, and any expansion underway?
Yeah, I think globally the liquidity is very good, and we are having great success in mobilizing retail deposit, as also we are planning a wholesale bond issue next week for a good amount. And our overseas business largely caters to the top corporates of India for their acquisitions abroad or for their external commercial borrowings domestically. So that demand continues, but it is only there for the best of the best in industry, and it is available only to those banks who can offer at a reasonable price. Coming to your question on the branch network, we had started with about 14,000 branches in the year. We have opened 800 branches, and next year also we hope to open a similar number of branches. We are holding good number of authorization. So branch network in physical terms is expanding at about 6%. But we are acutely conscious that we are relatively underrepresented in the metro and urban areas. So we are increasing our footprints in the newly developing areas of every metro. For example, in Mumbai suburbs, in Pune suburbs, in Delhi, Gurgaon, Noida area, in Calcutta, the Rajarhat area, in the southern part of Chennai towards the old Mahabalipuram road, and similarly Bangalore towards the airport and Hyderabad, and this applies similarly in Ahmedabad. So we are very much there trying to encash or trying to hook onto the opportunity that is coming up in the new developments in the different metros.
Sir, you're about to complete your 2 years of your term right now. How's the tide been so far as chairman at SBI?
No, I don't have few years, I have a few months. So, but the 2 years, I think we can look back with great satisfaction. The bank was in shambles. The bank had a tier 1 capital ratio of 7.70. We have been able to restore it to something close to 10% because we had very robust internal generation. The income tax payments have been optimized, and also there has been infusion of capital from the government. We have mended fences with Reserve Bank of India. We have a much more functional and not at all a bitter relationship. Thirdly, our retail network has done wonders. We have been able to shed a total dependence on bulk deposits, and today each of our 14,800 branches are air conditioned, provide ambience, good ambience and good customer service. So I think it's important for the bank to fire on all cylinders. It is important to do the retail well because that's where the deposits are. It is important to keep an eye on the treasury and also on the loan book. And I think we have been able to solve in these 2 years very intractable problems like relating to our pension fund and provident fund, which is not known much to the outside world. But that has been brought in, and finally I am very happy to say that the work culture in the bank has improved very significantly. We have come down with heavy hand on any act of indiscipline, and today the bank staff is extremely motivated, and this can be proved by the fact that when we advertised for the probationary officers recruitment, which was once a glamorous position and had fallen low, we got 17 lakh applications. So that only speaks that what the outside world thinks of a career opportunity in SBI.
All right, that's Mr. Pratip Chaudhary there.